Welcome back my friends. Let's quickly talk about Tesla's technical chart, where are the support and resistance level. In our last video, we shared about how to identify such levels. I'll link the video up and down below. So before I begin, do help us out by clicking the like button. Thank you. The daily chart is a visual representation of major transactions. As mentioned before, you need $30 billion to move 5% in the $600 billion market cap of Tesla. Hence, the movement are caused by institutional investors rather than retail investors. So let's quickly look at Tesla's price chart and identify where the major support and resistance levels are. I'll save you guys some time. This was in our previous video. The current price of $616, the first support level of that is $559. And that is our first safety net. If it breaks, the next support level comes in at $488 and the third support level is at $417. The first resistance level from the current price is actually $625. That is our first ceiling to break. I'll redraw to show you guys one more time. As you can see here, I circled the two highest volume bar and I referenced that candle to the highest volume bar. So this is the candle, just for illustration, and now I'll drag it to the current price. And this is one of the support resistance zone. Okay, so from here, I'll find the other one. So this candle is for this volume bar, and I'll drag it to the current price as well. So this acts as another support resistance level. Okay, so as you can see, the prices are trying to push past 625 and is having a difficulty because it's the resistance. So let's address why is Tesla down so much and for so long, and will this level ever hold? In my opinion, Tesla ran up too fast and too much. It was overvalued in the short term when it was sitting in the high 800s, but not for the long term. There was also a lot of margin in the stock market. People were using leverage money to buy up the market. The low $600 looked like a consolidation zone. There is also fear of inflation as commodity prices spike up because there's a shortage of labor and too much demand for necessity goods. As you can see from the lumber and oil prices, there is also fear of money printing resulting in devaluation of fiat currencies. People are anticipating inflation and the market is anticipating the Federal Reserve to raise interest rates. When interest rates rise, borrowing money from lenders will not seem attractive. Growth stocks don't do well when interest rates increase because they need money to scale quickly and expand quickly. That alone, coupled with a lot of fear, doubt and uncertainty such as the one we see in Tesla China protests, Tesla car crash in Texas. The mainstream media has all the incentives to attack Tesla because Tesla does not pay a single cent to advertise as compared to other car makers, oil giants, etc. There is nothing wrong with Tesla's fundamental and they will continue growing at least 50% per year in terms of vehicle production. It is only a matter of time that they drive the cost of electric vehicle down and introduce software revenue through full self-driving. I've made a whole video on this and I'll link it up and down below. So do not fear and just dollar cost average. Don't be short-term smart but long-term stupid. With that, I end off today's video. Do show your support by subscribing to my channel and ringing the bell button. I'll see you next week.